Good morning, everyone. Welcome to the Fund Expert Talk. I'm Mbayi, Head of Banking and Finance of the full-service Luxembourg law firm Praxio. The Fund Finance Expert Talk, you know the formula. I meet with industry leaders, and we have three main objectives for the discussion. The first is to inspire, as we discuss about correct path of industry leaders. The second is to inform, as we give market update, and the third is to teach, as we discuss about technical points. And today I have the pleasure to welcome Billal Malik. Hi, Billal.
Hi, Michael. How are you doing?
I'm doing great. Billal has been involved in the fund finance industry for a number of years now, and he's one of the leaders in the industry. Can you, Billal, please further introduce yourself, your bank, and your role at the bank?
Sure. So, Billal Malik, I currently work for Citi. I've been at Citi for 15 years within the wealth business. I currently am the interim head of structured lending, and that includes managing our subscription credit finance portfolio.
Thank you, Billal. And first, can you maybe walk us through your career path in fund finance?
Sure. So I joined Citi on the graduate scheme, actually within the transactional services business, where I'd carried out a summer analyst program. And actually, the reason why I joined transaction services is because it was an international program, and so you could rotate around in different countries every 6 months over a 2-year period. So you'd have 4 rotations. My first rotation was actually in the private equity fund services team. So it's outsourcing middle and back office solutions to private equity managers. We had a large business in the US and reasonably good sized business in Asia, but we had a gap in EMEA. And so a director from M&A had been brought on and moved internally to lead that effort in EMEA. So I worked with him really, and this was my first exposure to private equity, private markets. And we built a business from scratch. So we built a whole kind of sales team, product management team, and operation team in Dublin. I was employee number 2. I think when Citi ended up selling that business, and when we sold it, we had around 20 staff in EMEA across Dublin, Luxembourg, and London. And we won a lot of mandates, and so we were pretty active in the Middle East, and we won a lot of private market managers in the Middle East as well as in Europe. And we particularly focused on spin-outs from larger firms, which needed kind of that infrastructure support that a large bank could provide. So I actually never rotated on that graduate scheme. So the reason why I joined that graduate scheme, I never actually fulfilled that dream. And so I stayed within the private equity fund services business for 3.5 years. I introduced some of my clients to the private bank who provided the subscription credit finance product. And I thought this was really interesting. I became a CAIA charter holder during this time of my career as well. And I was learning more and more about alternatives. And so I moved actually internally into the subscription credit finance team. We used to call it the PEC team back in the day, private equity capital call. And initially as an underwriter, kind of underwriting the transactions, working also on commercial real estate and margin lending. So I was getting a broad range of experience, and we did the odd art and aircraft transaction too. And that really developed further as we built the business pretty significantly. And so I was tasked with building out our Nordics business, Switzerland, and working with a lot of the UK debt managers as well. And so we were fortunate to build a pretty significant business here in EMEA on our capital call facility product. And then we had a slight pivot post-COVID. And so and the global head of the banking and lending business used to sit very close to me, and he managed, a multi-billion-dollar business from a revenue standpoint. And he needed a lot of help and support because he effectively had all really senior guys reporting into him. And so I was helping him with a lot of like strategic presentations and things, just more to help him because I like the individual. And so he effectively asked me to be his head of strategy and business development in 2022. So I got to work across all different lending products within wealth, which was really interesting, as well as the subline business. And then When he left, I was asked to kind of run our subline business globally. And then I took on the law firm financing business as well, so lending to law firms. And more recently, I've taken the role as interim structured lending head, which covers aircraft, art, commercial real estate, unsecured facilities, and some other tailored facilities we provide to our ultra high net worth clients, as well as sports finance as well. And so it's been very interesting. This role is relatively new. I've only been in it for, I would say, 3 months now, but it's been a great learning experience.
Thank you, Billal. And were there pivotal moments in your trajectory?
Yeah.
Pivotal mentors?
Yes. No, I think good question. I would say one of the pivotal moments was taking a leap of faith and not rotating around the graduate program, as I described a little bit earlier. It was very easy to kind of be part of a structured program. I took a little bit of a risk to say, look, I actually find this interesting. I want to build a business from scratch. You don't really get many opportunities to do that in a large institutional bank. And so that was a pivotal moment, and that really got me that private markets exposure. I would say completing the Kaya was a great experience, mainly from a learning perspective, and also because I actually attended a lot of the classes, just understanding the world of alternatives, what other people did in my class, because there were a lot of hedge fund guys in that class, people who worked for other asset managers as well, who worked on more liquid strategies and getting more exposure to alternatives. And so I think I did that at a time where alternatives was just about taking off, which was around 2011, where we saw significant amount of growth post that. And then the other pivotal moment, I would say, is moving from a pure kind of transactor role, which was what I was doing in booking sublines, to take a more strategic role in that head of strategy and business development role, because that made me, I would say, a lot broader in terms of the knowledge that I was picking up. And it also, it gave me a lot of access internally to individuals I wouldn't necessarily have. So I got to present to very senior individuals within the firm, and that was a great learning experience.
And for the FFA, you are the origin of creation of the NextGen Network, so the Fund Finance Association NextGen Network. Can you walk us through the journey beyond that?
Yeah, sure. No, I'm very proud of that. And we have, I would say, probably close to 1,500 members now globally. And this started obviously from zero, so it's been a huge amount of growth. But where this originated from was that I would attend the Fund Finance Association European Symposium. And, I went the first year and I thought, okay, look, this is really interesting. I'm learning a lot. And then second year I went and I just looked around the room. And at that time, it used to be held at the Claridge's, I believe, or the Claridge's or Savoy, one of the two. And I looked around the room and I thought, there are not many people here who are of a similar kind of title or level as me. Effectively, they were all very senior individuals, so MDs at firms, partners at law firms. And I thought, you know what, we're missing a trick here, because it's all this great content, but actually a lot of the people in the room probably already know this stuff, and it's probably a bit more specific to the next gen who could actually develop and learn. So I saw Mike Massier in the foyer, and I said, look, why don't we create an initiative focused on next gen? And he said, yeah, like sounds exciting. Can you put together a couple of slides and present to the board? And so I did that. And Jeff Johnston and Mike were super supportive. I prepared a deck. I went and met with the board. It was supposed to be a 15-minute meeting. It turned out to be an hour meeting. They were really passionate about it. And so my idea was create specific events for the next gen community from a learning perspective. Also create better opportunities from a networking perspective, provide mentorship. And so, as you know, we have a mentorship program as well. And then also giving back. So we effectively look at the communities we serve, the areas we operate in, and can we do charitable work or maybe sponsor scholarships for underprivileged students, etc. And so fortunately, all of these things have happened. And so it's been a pretty active network. We started in EMEA, we grew it in Americas, and then lastly, we set up a team in Asia to focus on it as well. Clearly, everybody's doing this as a part-time job on the side of their main job. And so it takes a lot of people, but people are very passionate about it. And so I've been very fortunate that I've been involved in the Next Gen initiative, and I love to see how it's grown, really.
Yeah, congratulations, Bilal, for that initiative, because indeed this has helped over the years a lot of young professionals to, yes, evolve in their career, to network. There is also the great mentorship program, which really important for younger professionals. So, and also I think it's also a message for the agents that when you have an idea, just go and implement it. Have this leap of faith and just go for it, because I think that at the time when you had the idea, you could not imagine that you have yes, so many members today, and it was of so much an impact in the industry. So congratulations.
Thank you.
And yes, so if you had a young professional today wanted to launch his career in fund finance, which type of advice would you give?
Yeah, I would say it's a tough market out there, right? It's only becoming more and more competitive. Even for the war of talent, I would say it's becoming super competitive. So I would say be intellectually curious, ask questions, and make sure you work hard, right? And look, there are various technologies that are coming out there, and we're seeing this with AI, but don't be resistant to the change. Just embrace it and see if you can kind of be the leader of that aspect within your firm, so that you are the go-to person. I think it's important at a relatively early stage in your career that you are owning something for your team. And that could be something as small as managing the pipeline, right? So if the head of the business wants to understand what transactions are happening, what's the probability adjusted weighting, what's the forecasted revenues that could be achieved in this year or next year, then you are managing that for them. And so you are building your kind of worth within the team at a relatively early stage, and then ultimately keep trying to take on things and learn and develop, so you are the go-to person. I think that's very important. Don't shy away from work. If you are going to make mistakes, that's fine, and it's natural and it's part of your learning and development. But ultimately, those mistakes that you make are going to kind of they're character building, and they're going to develop you a lot further. From my perspective, when I look at our associates and AVPs, etc., I would rather they make these mistakes now, and effectively take on more work and learn and develop, rather than shy away from work and not make any mistakes. To me, the former is a much stronger form of development.
I think I totally agree. I think that yes, you need to make mistakes. It will come, but this is where you go out of your comfort zone. So as you are a younger professional, you learn your work, so you make mistakes, but that's fine. You build step by step, and then you'll have a great career and be a great professional. And in terms of market trends, what are the current market trends?
Yeah, I would say I'm probably not going to say anything too new, but that some of your audience haven't already heard before. But there seems to be utilization rates for capital call lines have reduced somewhat. I think given the interest rate environment, but maybe that's going to change when interest rates come down a little bit. I've when we have some conversations with managers, the first time they've actually raised these points to say, look, I'm in two minds, or should I draw my facility or actually just call capital? And historically, that hasn't been the case when we've had relatively low interest rates. I'm seeing a lot more players in the US market now, a lot of Asian banks wanting to get in, actively calling us to say, look, can we be participants in some of your transactions? And so I think there is a lot of competitions for transactions, and obviously we are seeing the bigger trend with the NBFIs coming into this space, and I think that's only going to grow. And so we're seeing different types of capital pools in transactions. I think that's taken off more in Europe, and I think Europe was actually the leader for that. But it is catching on in the US as well. And so I would say these are a few of the kind of trends we're seeing. And then obviously, I think we've all seen the development of the NAV financing market in the last 5-6 years, where growth has been was almost say actually exponential. The growth we've seen in the NAV financing market compared to where we were say 5 years ago.
And where do you see the biggest opportunities for fund finance for the next 2-3 years?
Yeah, I think the biggest opportunity is how we manage the institutional capital coming into our lending products to really make this business. I feel like we're in a transition from a bank-led market into a more institutional, broader level market, and we are still on that journey. And I think the ultimate end point will be when we have, we don't even need to explain to institutions what the fund finance market is, and they'll be relatively active in participating in transactions, even if it's from a sub participation standpoint. I think the other point is leveraging the rating agencies and seeing, how firms adopt their ratings in their own kind of credit analysis, and also from a regulatory capital perspective, if they can be leveraged even further than what they are being used for today. I think these are kind of the key things that I'm seeing. And then also to kind of reiterate the point, I think we're going to have a much more developed NAV financing market. I still feel that with some managers, explaining NAV financing, explaining the benefits of it, where it can be used, where it probably doesn't make sense to use it, are the conversations that we are still having. But I see maybe in 5 years' time, it will be like the subline market, where it won't even be a conversation. It'll be either manager wants NAV financing or doesn't. It won't really require much education.
Thank you. And in terms of importance of returns, can you maybe share with us your perspective about that?
Yeah, I would say if you are lending from a bank, you need to be cognizant of returns, right? You can't just be allocating balance sheet without focusing on the non-lending revenue that you're generating with the client. I think a number of banks in the past have had lending-only relationships. They've changed that model, and now there's a lot of focus on the broader wallet that you have with the firm. And so each bank typically has its return hurdle targets, and I think there's a lot more discussion at capital allocation committees, green lights, around how is this going to be an accretive relationship if it's not already. What's the path to get to accretive relationship, and what can we do with the firm? And there's lots of things, right, you can do with the firm in terms of managing their capital markets transactions at the fund level, doing M&A advisory, manage their cash accounts. So there's a lot of business just from an institutional side that you could do with the firm, and then there's obviously business that you can do with the individuals at the firm as well. And so bringing that whole picture together, I think, is so important from a bank perspective, so that you can explain internally what the business opportunity is. And it's also important for the client, because then you can hopefully provide them the best terms, so that they are benefiting from the best that the bank can provide. So I only see these conversations becoming more collaborative, actually, between the firm and the lender around what is the wallet opportunity, and how can both firms help each other get to the ultimate objective of what they want.
Thank you, Billal. And to close, the last question. So if the next generation of professionals in fund finance were to inherit one mindset from you, what would it be?
Yeah, I mean, I would say it's a tricky question, I would say, and I hadn't necessarily thought too much about this question, but I would say actually it's probably not so much of a technical answer, but it's more about how you treat people. So from my perspective, I think the way I've been brought up is treat everybody equally, fairly, treat everyone with a high level of respect, and I think that has taken me a long way, both internally and externally, where it also helps build trust. And I think you shouldn't undervalue the the importance of trust, because that is, for me, I think trust is probably one of the most important things that you can develop with someone, and you shouldn't relinquish that easily. And when I say, treat everyone with respect, and it's not because of what you can necessarily gain out of it. I think ultimately you'll be a lot more comfortable in terms of how you feel, and I think that's important. But also, the other aspect is that I've realized that when I obviously try and make it innate in terms of how I'm treating people, but even when I make a conscious effort to kind of speak to everyone from a junior level to a more senior level equally in the same way, I actually probably get more benefit personally from the more junior people, where they've helped me out in certain situations, than I have necessarily from really senior colleagues. And so I think that's an important mindset to have. And then it's something Mike Massey said actually, and I really respect his opinions, but he said, look, don't count your favors. So if you're helping someone, don't think, oh, like I've helped Michael and so Michael owes me something. No, like that's not how life works, right? I might help Michael, and then ultimately another partner, Praxia, who I don't even know, is going to help me in an exponential way that I can't even imagine at this point in time, right? And so that's ultimately how life works. And so I think don't have this kind of trade-off trading mentality with people. You just do the right thing, you act in the right way, and ultimately that will lead to good rewards in the long run.
Thank you, Bilal. Thank you for today, your insights today. It was great speaking with you. And thank you as well to the audience for your time, and stay tuned to our LinkedIn page and our social media for the next Fund Finance Expert Talk. Bye-bye. Cheers.